Hey guys, it's Will from the Back 40 coming to you live from Washington, D.C., and there's no way to get around it. We've got to talk about the latest soybean deal. Okay, guys, let's talk about what's really happening with the U.S. China soybean deal because the headlines and the reality do not match after just a week of the announcement passing by. The U.S. government announced that China would buy about 12 million metric tons of U.S. soybeans this season and 25 million tons annually for the next 3 years. That sounded like a little bit of a lifeline for American farmers, but the deal is already stalling, and the numbers on the ground tell a very different story. Traders and analysts are reporting that Chinese purchases of U.S. soybeans have slowed to a crawl already just a week out. Less than 2 weeks after the so-called breakthrough, new shipments aren't appearing in the export lineup. At the same time, China is sitting on massive soybean stocks at its ports, and their processors are facing negative crushing margins. When crushers are losing money, they don't buy more beans, especially not higher priced beans from the United States. And right now, U.S. soybeans are losing the price battle to Brazil. Brazil and Argentina have harvested huge crops. Their beans are cheaper, easier for China to buy, and come without many of the tariff complications still facing the U.S. product. China is already filling its supply chain with South American soybeans, and that means demand for American beans is taking a hit right when farmers were told the opposite would happen. So here's the real issue. The timing of this deal was already late for this marketing window. Even if China wanted to suddenly ramp up its purchases, they've already sourced heavily from South America. On top of that, U.S. beans remain at a cost disadvantage, and that's suppressing demand from the world's largest importer. This isn't a small hiccup. It's a sign of a structural shift. China is diversifying away from the U.S. supply, and a political announcement isn't changing that behavior. Like we said, Chinese port stocks are now over 10 million tons higher than the same time last year. That reduces their need for new shipments. Meanwhile, Brazil is pushing record volumes. Between the oversupply in South America and the U.S. disadvantage of beans, China simply has no urgency to follow through on the U.S. commitments that were announced. And that's why this matters. Promises don't pay the bills unless the beans actually move. Farmers can't operate based on political talking points. Export markets either function or they don't, and right now our biggest buyer is pulling back while our competitors undercut us. The risk is simple. If China keeps shifting towards South America, American farmers are going to lose in the long run. The bottom line is this. The U.S.-China soybean deal, as announced, is not materializing. The window for this season is closing, the competition is stronger, and American farmers are once again left wanting for a promise that isn't packed with purchases. So if you're a grower, understand the deal isn't living up to the hype. If you're a policymaker, ask why we're still relying on one market that steadily moves its business somewhere else. Farmers deserve honesty, real strategy, and real results, not another announcement that evaporates as soon as the cameras shut off.